Welcome back to the channel. Today we're talking about something that every investor, every economist, and honestly, every American needs to hear right now. The United States and Iran are on the edge of a full-scale conflict. Bombs have already been dropped. Tensions are at an all-time high. But while the news is showing you explosions and military movements, we're going to show you something the mainstream media is not talking about. The financial destruction that's coming for America. We're talking about oil prices, national debt, stock market crashes, trade disruption, and a domino effect that could push the US into a recession it hasn't seen in decades. Stay with me for the next 10 minutes, because this video could change how you think about money, war, and the future of the global economy. Let's get into it. Let's start with the basics. How much does this war cost just to run every single day? Here's a number that will shock you. Just the preparation phase, moving aircraft carriers, deploying troops, activating missile defense systems, is costing the United States between $25 million to $40 million per day. And that's before a single ground soldier steps into Iran. Now let's zoom out. Afghanistan cost America $2.3 trillion over 20 years. Iraq, another $2 billion over 20 years. Iraq, another $2 trillion. And what did America get in return? A destabilized region, thousands of dead soldiers, and a national debt that is now sitting at $34.5 trillion. Let me say that again, $34.5 trillion. That is 122% of America's entire GDP, meaning America already owes more than it produces in a full year. And now they want to start another war? Economists are not just worried, they are alarmed. Because unlike 2003, when America went into Iraq, the US today does not have the same financial cushion. The interest alone on that national debt is now over $1 trillion per year. That's more than America spends on its entire military budget. So every single day, this war continues. America is not just spending money it has, it's borrowing money it doesn't have and paying interest it can't afford. Now here's where it gets really serious. And this is the part Wall Street is most scared of. Let me show you a map in your mind. There is a small strip of water between Iran and Oman. It's called the Strait of Hormuz. It is only 21 miles wide at its narrowest point, and through this tiny passage flows 20% of the entire world's oil supply. Every single day, Iran sits on the northern shore of this strait. And for decades, Iran has had one very clear message to the world. If we go down, the oil goes with us. Iran has anti-ship missiles, submarines, and naval mines strategically positioned to block or attack this waterway within hours of a war beginning. So what happens if the Strait of Hormuz gets blocked or disrupted? Goldman Sachs ran the numbers. In a moderate disruption scenario, oil hits $100 per barrel. In a severe scenario, we're looking at $130 to $150 per barrel. Right now, oil is around $70 to $75 per barrel. That means, in the worst case, oil doubles in price, almost overnight. And what does that mean for Americans? Gas prices go from $3.50 to potentially $6 or $7 per gallon. Airline tickets skyrocket because jet fuel costs explode. Food prices jump because everything in America is transported by trucks that run on diesel. Electricity bills increase because many power plants use oil derivatives. Every single product in every single store becomes more expensive. This is called an oil price shock, and America has experienced this before. In 1973, during the Arab oil embargo, that shock triggered a recession and stagflation that lasted years. The difference today? America's economy is far more leveraged, far more indebted, and far less prepared. Let's talk about your portfolio, or your savings, or your 401k. Because what happens in the stock market after this war escalates matters to every single American with a bank account. Here's what history tells us. When the US assassinated Iranian General Qasem Soleimani in January 2020, within 24 hours, oil jumped 4%, gold surged, and defense stocks rallied while airline stocks crashed. But that was a single strike. What we're looking at now is potentially a prolonged conflict, and prolonged conflicts create prolonged uncertainty, and markets hate uncertainty. Financial analysts are predicting sectors that crash: airlines, fuel costs destroy margins, consumer goods, inflation crushes spending, real estate, rising interest rates to fight inflation, tech stocks, risk-off sentiment kills valuations, sectors that surge, defense contractors, Lockheed Martin, Raytheon, Northrop Grumman, oil and gas companies. Higher oil prices equals higher profits. Gold, traditional safe haven, cybersecurity firms. Modern wars include cyber warfare. But here's the brutal truth for the average American. The majority of American retirement accounts, 401ks and IRAs, are invested in broad market index funds. When the overall market drops 10, 15, 20%, those retirement savings drop with it. A market drop of just 15% would wipe out approximately $6 to $8 trillion in American household wealth. Not corporate wealth, not billionaire wealth, your wealth. The savings of teachers, nurses, truck drivers, and small business owners across America. Now let's zoom out even further, because this war doesn't just affect America. It affects the entire global trading system. And when global trade breaks down, America feels it. Iran sits at the crossroads of east-west trade routes. The Persian Gulf region is not just about oil, it's about shipping lanes, supply chains, and global commerce. Here's what disruption looks like. Shipping insurance costs, called war risk premiums, have already jumped 300 to 400% for vessels passing through the Persian Gulf. That means every container ship, every oil tanker, every cargo vessel costs dramatically more to operate. And those costs? They get passed directly to consumers. Asian economies, China, Japan, South Korea, India, all heavily dependent on Gulf oil, will face their own economic crises. And when Asian economies slow down, demand for American goods and technology drops. American exports fall. American jobs disappear. The dollar's status as world reserve currency also comes under new pressure. For decades, oil has been traded in US dollars, the so-called petrodollar system. But if this war accelerates the trend of China, Russia, and other nations trading oil in non-dollar currencies, the demand for dollars drops. And when dollar demand drops, the purchasing power of every American's savings weakens. This is not a hypothetical. This is already happening, and a major war in the Gulf could accelerate this process by years, even decades. Let me bring this home. Let's talk about your kitchen table. America is already dealing with post-COVID inflation. The Federal Reserve has been raising interest rates aggressively to bring inflation down. It's been painful. Mortgages became expensive. Credit card debt became brutal. Small businesses struggled to get loans. And just when inflation was starting to come under control, an oil price shock from a Gulf war would reignite inflation. Immediately, the Fed would face an impossible choice. Option A, raise interest rates even higher to fight inflation, which kills economic growth, triggers mass layoffs, and crashes the housing market. Option B, keep rates stable or cut them, which allows inflation to run wild, destroying the purchasing power of every American's paycheck and savings. There is no good option. This is called stagflation, high inflation, plus slow economic growth, the worst of both worlds. The last time America experienced severe stagflation was the 1970s. It took an entire decade and some of the most painful economic policies in American history to recover. For working-class Americans, this means groceries cost more, rent goes up, wages don't keep pace. Your dollar buys less every single month. This is the invisible tax of war. Nobody votes on it. Nobody announces it. It just slowly destroys the financial lives of ordinary people. Here's something almost nobody is talking about. And in finance, we call it opportunity cost. What could America have gained if it chose diplomacy instead of war? Research shows that a normalized relationship with Iran could have unlocked a market of 85 million people, young, educated, and hungry for Western goods and technology. Estimates suggest America could have exported $25 billion per year to Iran in commercial aircraft, agricultural products, medical equipment, and technology. That's 200,000 American jobs, created without spending a single dollar on bombs. Instead, that opportunity is now gone, replaced by billions in military spending, economic sanctions that hurt American businesses too, decades of regional instability that requires ongoing military presence, and a generation of Iranians who will grow up viewing America as an enemy. In finance, we say, the best investment is the one you don't have to make. A diplomatic solution would have been the greatest financial decision America never made.
So where does this all lead? Let's look at the long-term picture. Leading economists and financial institutions have modeled several scenarios. Best case scenario: short conflict, a quick, contained military operation. Oil disruption lasts weeks, not months. Markets recover. Economic damage: $200 to $400 billion. Painful, but survivable. Moderate scenario: proxy war escalation. Iran activates proxy forces across the Middle East: Yemen, Iraq, Lebanon, Syria. Oil disruption lasts months. Recession probability increases to 40 to 60%. Economic damage: $1 to $2 trillion. Worst case scenario: regional war. Israel, Saudi Arabia, and other Gulf nations drawn in. Strait of Hormuz blocked for extended period. Global recession triggered. US debt crisis accelerates. Economic damage: $4 to $6 trillion or more. Dollar dominance permanently weakened. History shows that wars almost always move toward the worse end of these scenarios, not the better end. Because once war begins, controlling escalation becomes nearly impossible. So let's bring it all together. America is looking at $25 to $40 million per day in military costs. Oil potentially doubling in price, $6 to $8 trillion in potential household wealth destruction. Stagflation threatening everyday Americans' purchasing power. National debt accelerating beyond control. Dollar dominance being challenged globally, and a lost generation of economic opportunity. War is never just a military event. It is a financial event, and the bill, as always, will be paid not by the politicians who start it, not by the defense contractors who profit from it, but by ordinary American families at gas stations, grocery stores, and retirement account statements. The question is not just, can America win this war? The real question is, can America afford this war? Based on the numbers, the answer is deeply, seriously troubling.